Before it became a symbol of power, greed, and global finance, Wall Street was just a wall, built out of fear. In the 1600s, New York wasn't even New York. It was New Amsterdam, a small Dutch settlement on the southern tip of Manhattan. Surrounded by tension and threats, from native tribes displaced by colonization, from English warships on the horizon, and from pirates in the harbor, the settlers decided to build a barrier. In 1653, they constructed a 12-foot wooden wall across the island, running from the East River to the Hudson. That wall gave the street behind it its name, Wall Street. The wall came down in 1699, long after the British seized control of the colony and renamed it New York. But the name and the symbolism remained. In time, that narrow street would become the most powerful financial corridor in the world. But its rise wasn't built on gold and glory. It was built on risk, speculation, and human ambition. The financial story of Wall Street really began in 1792. That's when 24 merchants and brokers met under a buttonwood tree at 68 Wall Street. They signed what became known as the Buttonwood Agreement, an informal pact to trade securities among themselves and set basic rules. They didn't know it then, but they had just created the foundation of the New York Stock Exchange, which would formally organize years later in 1817 as the New York Stock and Exchange Board, and eventually take on its modern name in 1863. Back then, the trades were small, mostly government bonds and shares in the Bank of New York. But within a few decades, Wall Street became the heartbeat of a new American economy. By the mid-1800s, railroads, steamships, and factories were transforming the nation. Wealth began concentrating in the hands of a few powerful financiers. The street that started with traders shouting under a tree evolved into a network of banks, firms, and speculators that could sway entire industries. By the late 19th century, names like J.P. Morgan, Lehman Brothers, and Goldman Sachs defined Wall Street's identity. Lehman Brothers began as a small dry goods shop in 1850 and shifted into commodities and finance. Goldman Sachs was founded in 1869. J.P. Morgan and Company, formed in 1895, became so influential that when the U.S. government faced a gold shortage in 1895, President Grover Cleveland quietly turned to Morgan, not Congress, to rescue the Treasury. It was a turning point. Wall Street wasn't just part of the system anymore. It was the system. The Gilded Age made millionaires into kings. Industrial titans like Rockefeller, Carnegie, and Morgan controlled steel, oil, and railroads. The money flowing through Wall Street built skyscrapers, funded wars, and shaped politics. But the power came with corruption. Insider trading, market manipulation, and speculative bubbles became routine. By the 1920s, America was intoxicated by wealth. Radios, cars, and new technologies filled homes. People believed the market could only rise. For the first time, average Americans, clerks, teachers, and factory workers began buying stocks on margin, borrowing to invest. It worked until it didn't. On October 29, 1929, it all came crashing down. The day we now know as Black Tuesday. Billions in paper wealth evaporated, banks collapsed, factories closed, millions lost jobs, homes, and hope. And though newspapers exaggerated tales of investors leaping from buildings, the despair was real. The Great Depression that followed changed everything. Wall Street was no longer just a street, it was a villain, a symbol of unchecked greed. To rebuild trust, President Franklin D. Roosevelt created the Securities and Exchange Commission in 1934, the SEC, to regulate the markets and protect investors. For the first time, the chaos of trading had a referee. During World War II, Wall Street financed the war effort through massive bond drives. After the war, the U.S. economy boomed again. The 1950s brought new wealth, and with it, a rebirth of optimism. The stock market was once again seen as the pulse of the American dream. But the cycles of greed and correction never stopped. The 1980s brought an explosion of ambition and arrogance. It was the decade of corporate raiders, leveraged buyouts, and excess. Traders like Ivan Boesky became infamous for insider trading. Others, like Michael Milken, built fortunes on junk bonds and high-risk debt, legally at first, until his downfall in 1990 for securities violations. Movies like Wall Street captured the era's attitude perfectly: sharp suits, cell phones the size of bricks, and the infamous motto, "Greed is good." But behind the champagne and headlines, the same flaws lingered: risky speculation, fragile systems, and a belief that the party would never end. Then came 2008, mortgage-backed securities, subprime loans, credit swaps so complex even their creators couldn't explain them. The entire system was built on borrowed money and blind faith. When the housing bubble burst, everything collapsed. Banks failed, trillions in global wealth vanished. Ordinary people lost homes, jobs, and retirement savings, while the very institutions that caused the disaster were bailed out. Wall Street once again stood accused, not just of greed, but of indifference. Protests filled the streets under banners reading, "Occupy Wall Street." People demanded accountability, but the outcome was familiar: minor reforms, major bonuses, and a slow return to business as usual. Because the truth is, Wall Street doesn't really change. It adapts. In the 1600s, it was a wooden wall meant to keep danger out. In the 1800s, it was brokers under a tree, inventing a new system of trade. By the 1900s, it was skyscrapers of marble and ticker tape, rising above the city like cathedrals to money. And today, it's glass towers filled with algorithms, where machines make trades faster than any human ever could. But the game itself? It's the same as it ever was. A few insiders at the top, millions trying to climb. To some, Wall Street is a beacon, a symbol of ambition and innovation. To others, it's a warning, proof that unrestrained power always finds new ways to test its limits. The truth sits somewhere in between, because Wall Street isn't a villain or a hero. It's a reflection of us, of what we value, what we chase, and what we're willing to risk for it. It started as a wall to keep people out. Now it's a world that pulls everyone in. And through every crash, every scandal, and every rebound, one thing has never changed. The same forces that built that wooden wall in 1653 still drive the street that bears its name today. Fear, ambition, and the need to control what can't be controlled. Wall Street doesn't just move money, it moves history.